Hi, everybody. Welcome back to another episode of VCTV. I'm your host, Kyle Ellicott, and today we're going to be speaking about early stage and seed investing. We just spoke moments ago about SPACs and the whole opportunities that are happening around fundraising into the public markets and how the fundraising landscape has changed over the last 18 months. And now we've brought together some of the best and the brightest investors at the seed and early stage levels to talk to you a little bit about what's happening in this category, how to prepare yourself, what to know, what not to know, where things are happening for investors that are tuning in, where the opportunity industries are or technologies that you need to be paying attention to. We've got a lot of investors on today's panel, so I'm going to very much keep it short. But one fact I did want to throw out there today is Union Square Ventures did announce yesterday, USV, that of their new $250 million fund, they'll be allocating 30% of it into blockchain and crypto-based companies. So something to note, and also stay tuned for today's discussion. With that, if you'd like to be on a show like today as an investor or as an entrepreneur, do reach out to the team and or myself. We'll find the right spot for you. Speaking of that team, a big thank you to the Latoken team and to Maria for making VCTV possible every single day. And to hear more from each of our investors and on today's topic, make sure you check out the archive as we've got episodes covering all regions around the world. With that, let's go ahead and jump right into introducing today's guest. Jose, welcome back. Kick us off with a quick introduction.
Thank you, Carl, for having me on your show. So basically, I am the business inclusion man. I'm focused on that area in particular, also with the investments. I'm here to make it happen and talk today about the seed and early stage investment.
Wonderful, thank you. And Wendy, welcome back to the show. It's an absolute pleasure. A little intro, please.
Thank you. Woohoo! Thank you, Kyle, again. And Maria, woo! So I'm Wendy Diamond. I'm a lifelong social entrepreneur my entire life. So I've always been kind of a startup person. I'm invested in limited partner in 3 funds focused on blockchain, Bitcoin, and the crypto world. I'm also a seed investor and Series A sometimes as well. And I'm in about 20 companies, all making a positive impact in this world. And my focus is women founders, and excited to be on the show. Thank you so much.
Wonderful and excited to have you. Brett, quick intro.
Brett Noyes, Unventures. We're an early stage investor syndicate consisting of about 500 early stage investors. Primary focus is on the fintech vertical, future of work, S&B automation, and regulatory and data compliance, and then past work. I see that Matthew's got his Keiretsu Forum background up. I've started a Keiretsu Forum group in the Northwest, and I've worked for several other angel investment groups. So I've spent the past 12 years working with very early stage companies.
Wonderful, thank you. Speaking of angel groups, Mark, welcome back to the show. Quick intro.
Always a pleasure to be here, Kyle. Thank you for having me. Mark Müller-Eberstein out of the Pacific Northwest. I'm a member of the Alliance of Angels, of the Swan Fund, the ACA, managing member of Codex 3. That's a group of folks that invest in the blockchain space. I'm an advisor to and investor in a bunch of funds, things like Blockcelerate. As well. I'm on the board of a couple of companies, advisory board of startups that I'm trying to help. So far, we're reasonably successful, and also a big fan of female entrepreneurs, Wendy. So my wife and I were investing in through portfolio into women-led companies.
Wonderful, thank you, Mark. And even furthering on the angel groups, Matthew, welcome back. You wear many different hats, but today you've got Keiretsu Forum, as Brett pointed out, so we'll let you take it from there.
Thanks a lot, Kyle. It's always great to be here. And normally when I'm on your shows, I'm blockchain co-investors, the leading blockchain venture fund of funds. But today I'm a managing partner of Keiretsu. I've been there for about 15 years now. It's the world's largest angel group. We're in about 55 locations in Europe, North America, and Asia. Just finished our reporting last year. Even in COVID, we backed more than 300 companies. With about a little less than $100 million. So we are pretty confident we'll show up again as the most active angel group in the world. Back to you, Carl.
Wonderful, thank you. And for those who have not checked out Keiretsu Forum, highly recommend it as well. Gary, welcome back to the show. Quick intro.
It's been a while, Kyle. It's been about 20 minutes, right?
Yeah.
It's great. It's anyhow, my name's Gary Fowler. I'm a serial entrepreneur and investor. I've done 17 companies. I started the first accelerator in Russia. I started the #1 private corporate accelerator, GBA. I love AI and quantum computing. I was on the original management team at Click Software, which was sold for $1.35 billion to Salesforce, and also as an executive, and also co-founder of the Eva.ai, a premier AI company. Today, I'm the CEO, president, co-founder of GSD Venture Studios, and we curate companies from around the world. We just actually pleased to announce our first African company this morning. So Germany, Hong Kong, Indonesia, Australia, Russia, all over. We're curating companies that have the chance to go global. And we look for unicorns, and I've said a few times that unicorns are mythical creatures. You know, we make them real.
Wonderful. Thank you, Gary. And last but not least, Alessandro, a little introduction for the audience, please.
Hi, Kyle. Good to see you again. I'm
see you as well.
Alessandro Piol. I'm based in New York. I'm an investor and entrepreneur. I spent 2/3 of my career as an investor, and right now I'm actually the president of one of my portfolio companies, which is a good thing because it reminds you once in a while what it means to be an entrepreneur and be more respectful of the challenges that always facing entrepreneurs. But having a good time. The investments I made these days are mostly seed investments in companies that are focused on cybersecurity or AI-driven type of products. And I don't know if you noticed on top of my shoulder here in the window, this is a Duomo in Milan, but look who's there in the window. It's Bernie in mittens. Can you believe that?
That's wonderful. The infamous Bernie Sanders meme that went around last week. Thank you, Alessandro. Welcome, everybody. I want to jump right into today's topic: early stage venture and seed investments. So much has happened. There's more opportunities than ever for companies looking to raise capital at any stage, but more specifically at these early and seed stages. Would love to hear your thoughts at how things have changed over the last 18 months. Matthew, I'm going to come to you to set the stage for us today, as you do wear many hats, and we've spoken about this subject many times here on VCTV. What has changed over the last 18 months from your view around early stage and seed investing?
Well, Carl, that's a big question, but I think 2020 was an inflection point, and it's going to take us a few years to really understand that. The world went digital and virtual, and we accelerated almost all of the adoption curves on early stage technology by 5 to 10 years. And in the middle of a terrible pandemic that was is still greatly distressing to many families and businesses and groups of people around the world, the reality is for early stage tech, which all of us are early stage tech investors, it couldn't have been a better year. And you've got to be careful saying that because a lot of people are not happy to hear it. For entrepreneurs, it may have felt tougher to raise capital, but actually it was a banner year in America, more VC and angel investing than we had expected. The VCs actually had a banner year. For the angels, our angel group I just mentioned, we never invested as much. 300 companies got backed, which is our highest ever. So we all figured out how to go virtual. I think if you're an entrepreneur, the other thing you should know, there's a lot of data from Harvard and MIT and Stanford and others where they analyze venture and angel returns. And there's a lot of evidence that says the depth of a recession is actually a good time to launch a technology company. And there are several reasons for this. 3, and then I'll wrap up. One is that the competition is less and less companies get started. The second is, and this is not necessarily good for entrepreneurs, but valuations are lower and smart investors keep on investing at lower valuations. But the third is the large companies get more and more comfortable taking on some new technology and innovation opportunities in the next couple of years, because they've got to figure out how to grow fast again out of a recession, and they have less people and they're willing to look at and explore new technologies and ways of doing things. So anyhow, that's what I'd say. 2020, very odd, tragic year, but great for early stage technology. And actually, the next couple of years are going to be good for entrepreneurs too.
Yeah, thank you very much, Matthew. And Wendy, I want to come to you next on this. We've, again, talked about this topic. Now, furthering the stage, anything to add on to Matthew, but in general, what have you seen both being an LP and also, so a limited partner in funds, and also as a direct investor, kind of changing throughout early stage investments?
Well, first of all, woohoo! I mean, what we've seen in the last year, right, about Bitcoin and blockchain, we're now mainstream, right? We've got opportunities now. Everybody realizes PayPal and Square and, you know, Michael Saylor and MicroStrategy and all some of the biggest fund managers in the world have gotten behind Bitcoin, as well as you know, the technology of blockchain. So I think right now what you're going to see now is like traceability, transparency. I think you're going to see a lot of companies in that space, you know, which I've seen myself. I also really believe it's the future of work, right? I mean, everything's transitioning. There's 75 million people in America on unemployment. There's 190 million worldwide. And I think like I'm seeing a lot of really interesting plays on that as well. I just invested actually on Monday, a company which is called Open Grants, which is basically disrupting the entire grant. Billions and billions of dollars are never used by the government, and being able to make that accessible and democratize that. So enabling companies and foundations to access this more quickly, which is really exciting. So I'm excited about that one. Woo-hoo! And then the pet world. I've got 10 new companies that I'm looking at right now. I think that this is a great opportunity because listen, there's no more animals in shelters. Like I have literally, I have the executive producer of Yahoo Finance. I've got all these people calling me up, Wendy, how can we get a dog, right? They can't find a dog and they're all calling me and I'm like, ah. And so, you know, I think what we're going to see right now is that industry is exploding, and it should be. You know, I've been in it since 1999. Let's not age myself. But, you know, I knew when I learned that 12 million animals were euthanized a year, I knew if we could bring pop culture and celebrities and make it aware that you could adopt any dog, any size, any age, we could bring that number down. And now that number's down to 2 million. Everyone in the world realizes the importance of that unconditional love and, you know, a bond, that there's nothing better in this world. So I think, you know, definitely in that space is going to be exploding in the future, and especially this year. And of course, you know, I think that, you know, supporting women founders, there's never been more people launching funds for minorities as well as women founders. And I think we're going to see an increase from that pathetic number of 2% that is now investing in women founders. I see that going up. Let's hope twofold. So like 4%, woohoo, which is still pathetic, right? So I think, you know, just like you're going to see a lot about that, because I think right now it's all about equality for all. Thank you.
Absolutely. Thank you. And pets. This is a multi-billion-dollar market that goes unnoticed in many cases when companies are looking to get started. And to Wendy's point, it's definitely an area of opportunity to pay attention to. Mark, I want to come down to you. I mean, you work with a number of angels in the Northwest, along with just on a global scale as well. What have you seen change from your group and your individual efforts as a angel investor, or excuse me, as a seed investor over the last 18 months?
Just seconding a couple of things that Matthew and Wendy just said. I think it has definitely been a year of transformation. I think Matthew called it digital transformation virtual. I think that has fundamentally changed the opportunities for businesses, but also how we as angels and entrepreneurs work together. I think the coffee meetings for pitching have been, of course, completely gone. It has all been moved to a virtual conversation and communication, building relationships on a virtual way. I think this has definitely changed how people are engaging. And it's an opportunity. I think it's an opportunity for entrepreneurs to reach out to more people. It's an opportunity for investors to see companies from areas that otherwise might have been a little bit harder to actually meet in person. I'm personally really struggling with this dichotomy. On one side, huge optimism, huge opportunities, and I'll talk about those in a second, but also the despair on the other side. I mean, we have questions is that how many people cannot work as much as they want to work? How many people are impacted by COVID? I think I just talked to a friend in South Africa who lost his 27-year-old friend, and one of his employees lost 7 people. I mean, these numbers are real. These things are happening, and it's really impacting people. And again, on the other side, you can make an impact if you have the right teams tackling on the right problems. We have invested in companies like Filter that are supplying PPE through Costco now overall through the US, and Target and Best Buy, making sure that high quality N95 and KN95 material is available to first line workers as well as to employees of companies, and through donation efforts, helping underprivileged, especially groups and kids, being able to go back to school and opening education. We have invested into Bala, that is helping nurses to have better footwear in their day-to-day environments. And we all know how difficult savings are for building up savings is for many. So we're invested in Secure Safe. GeekWire just wrote a couple of articles about them over the last weeks. That is helping building emergency savings for employees. And then, of course, Wendy mentioned blockchain. We have seen so much opportunity in the DeFi space. Again, figuring out what's real, what's not, is a key challenge.
Yeah, and it's a great point. Brett, I want to come to you next on this in terms of what's real, what's not. I mean, you've been focusing pretty heavily around the fintech space. We've talked a lot about this. What have you seen kind of change, or how has your thesis changed around fintech, including decentralized finance and others, over the last 18 months?
Yeah, so I've been in the fintech space for probably the greater 6 years. And I think we've talked on the many panels, but I feel like that space has really matured. Like the big gains and big winners have been picked. Not to say there's not other, there's like tons of different new and smaller opportunities. But the DeFi space kind of seems to be a subset and almost kind of like the anarchist version that probably initially pulled me into liking fintech. So I think what's different, the fintech is a more mature, more regulated space, and DeFi right now is kind of out in the wild, and there's a lot of great opportunities. And speaking, kind of building on what Mark said, right? It's also very challenging to figure out what's real, how to trust a team, how to get comfortable with working with, especially in the decentralized space, with decentralized teams, potentially never actually seeing the companies in person. So I think there's way bigger global opportunity in the DeFi space, but it's also more challenging to sort through the shaft and see who's real and who can actually deliver on their promise. And honestly, there's a ton of, similar to early stage fintech a few years ago, where people didn't really understand the regulatory space. So that's kind of another one of the opportunities and challenges in that space.
And thank you. And Jose, I want to come to you next on this, continuing the topic around fintech. How have things changed for you over the last few months? Looking at it, not just from BizMoney's perspective, but also you as an angel investor, how have things changed, maybe readjusted or realigned your thesis to the coming future?
I've never been so active since COVID started, to be honest. But I was traveling on a weekly basis all over the world, sometimes crazy trips, and it could last sometimes like a month, and I would have to buy clothing on the way because I would run out of clothes. So a lot of things happened before that. But since COVID started, I finally realized how much time I was losing constantly traveling and running around from place to place just to meet people and to talk to them. And the efficiency today is such that I don't know if I want to get back to traveling, to be honest with you. That's one point. So I'm fully invested into this business inclusion issue, especially because I see that all the professional investors together today, they are not able to cover at the utmost 0.1% of all demand on the market. So we're talking about an issue that touches woman, man, ethnicities, you name it. The problem is that we are still addressing the cream of the cream always, right? And it's always a drop in the ocean. And all the other 99.9% that have this dream and would like to make it happen, and together with them, I include all those people that are basically jobless, not able to get a job, and that's going to increase drastically in the next 5 to 10 years. So we need to find a solution that is going to bring these men and women back somehow to society and the working process, and that they are happy and they're able to make their living, and it's not about, it's fine, an X amount of them will start and becoming a unicorn. But I'm more concerned, instead of finding a unicorn, I'm more concerned on getting a solution to the masses. Because let me put it like this. At the end, I don't know what is going to make it bigger. the masses or a few unicorns. That's the issue, right? And my focus is in that area. So what we are trying to do is pick up that 99% that every professional investors basically are not interested in. We are just interested in those guys and not giving money, because I don't believe that that's the solution. What we do is we give them the ecosystem that they don't need the money, and we give them the training program that they are able to pick up and increase their success rate highly. So once they have achieved that point, then what we say is, okay, now you are fine to get picked up by a business angel or by a professional investor like we see of private equity. And why do I say this? Because not all of them need and have the ambition to become a new unicorn. I can even say that a small minority has the ambition to build a unicorn, right? So I'm trying to make a difference in that area, especially because there is no offer in the market. And I can even say the competition is almost zero today related to business inclusion. So that's my focus today, and fintech is part of that puzzle.
Thank you, Jose. Alessandro, I want to come to you next. Your general view of how things have changed from an early stage seed perspective for you and your group over the last 18 months.
Well, I mean, I think we've all watched the same picture. When the COVID started, I think there was a month or two or so that people felt a little bit paralyzed, you know, what to do. But then I think the investing started again in great amounts, and people get over the concept of the fact that they usually are. I've been in the venture capital for almost 30 years, and it's always been like part of the process to sort of meet the people in person and shake hands and go visit the premises and get to know them. Go out with the CEO and his or her spouse for dinner and get to know them better. All these things that usually used to get done especially in early stage situations. And now, sort of all of that has gone out the window. Just meet on Zoom and make decisions based on that. But funds have the necessity to put money to work because they cannot. They have a limited investment period of 3 or 4 years, and so they cannot really stay out of the game for like a year and a half. And so they need to just continue and put money to work. And so at some point, people have to get used to the concept of trying to get to know people via video conference, not meeting them in person. And I think it's become something that because of it's become a comfort level. I think we've seen investments increase in a variety of areas. I mean, in my sector, I mean, I've been following very closely the sort of artificial intelligence driven companies, right? The one I'm particularly involved in is actually an AI company that's focused on biomedicine. So all these crossover opportunities that go across industries, which are a little tricky because you don't know exactly what kind of investors to find or who does those type of things, are actually the most interesting. And I think what Wendy was mentioning before about blockchain related opportunities, also that's a great area of interest that I'm planning to look more into now. I mean, I've sort of been watching it for like a few years now, but I never really made a move in the direction. But I think it's a technology that's now matured, and we see more opportunities. Many of you may have seen an article on the New York Times this morning about the social networks and building social networks that are more blockchain based, so they're more independent. So the freedom of speech is preserved, even though we all know what it might mean in a negative perspective. But I think things like what happened with Twitter and President Trump, were sort of mixed. Receive mixed results, right? Because on the one hand, you're trying to eliminate violence or hate speech on the internet. On the other hand, you're sort of limiting the First Amendment, and that's wrong also. So what's the solution? And I think we see new networks coming out of this that based on blockchain that will sort of provide a platform that anybody can use without being stopped, right? And which will create another debate later on, but we'll see.
And speaking of artificial intelligence, Gary, where does AI from a seed perspective or early stage perspective go in the next 12 to 18 months? If you're an investor or speaking with investors, what should they know and what should they be paying attention to if they're looking to start making investments in this space?
Yeah, so I want to start out, Kyle, by just where we are and where we've been. So I mean, think about it just on the VCTV perspective, and I'm not just trying to give plugs. I mean, this is real. The world didn't have a way to connect, and I know I get about anywhere from 20 to 30 LinkedIn connections per day because of VCTV. So we didn't have a way to communicate. The communications were broken down because, Matthew's right. I couldn't go down the street, down El Camino Real, and go to Hobie's where I would meet people for breakfast or lunch with the VCs and companies that just didn't exist. So platforms need to be put in place in order to be able to keep those relationships going. So the digital transformation and having Zoom is upon us. So I'm really encouraged. And in terms of GSD, I mean, what we did is we took it to one step further. We said, well, let's go out to these companies in Africa, in Asia, in Australia, in Indonesia, Japan, everywhere. Let's start connecting the dots because they really don't have a voice in Silicon Valley either. So we came up with that idea. Not sure, again, we tested it, but those are the kind of things because again, it's not only creating the platform, it's being able to see where that train is going to go, where the station's going to be. So it's very, very interesting time. At the same time, companies have adapted. So in terms of AI, I mean, we're at the dawn of a new era when we look at unsupervised AI and some of the things coming out, intelligence. Matthew talked about transportable AI models across, I believe it was Matthew, talked about Alessandro, I'm sorry, across multiple platforms. That's where it's going to be. It's all about the training sets. So I'm looking at AI can be moved. I did it myself with my team with Eva. We were first a Google-like search for the personal cloud and then moved over to HR tech. So it's being able to take those incredible models and to move them forward. What we're looking for is teams wherever they're located that have that expertise, that have the basics, again, the team, et cetera, but have some new ways of looking at things, whether it's, we also invest in quantum computing, but from an AI perspective, what are they doing to be able to create not smart, but intelligent assistants? Where are they able to use it? Do they have customers at all today? Do they have a proven model? We're not early stage investors. We're at the point where they come through an accelerator, they got an MVP, they've got a little bit of revenue, and they're ready to go to the next level. That's really where it's interesting from my perspective. And AI is a misused term, whether it's deep learning or machine learning. It's not really defined the way it should be. So it's really broad.
Absolutely. Thank you, Gary.
Gary, I think you mentioned communities. I think that's really what's changing. We had existing communities that have transformed. If they want to still add value, I'm looking at Brett's Mountains and I'm missing my Davos community. So I would be right now, I was thinking every year I have been in Davos during this time, and it's not happening. But it has changed online. I mean, there is definitely new communities have emerged, and I think Latoken and the conversations we have is one of them. So thank you very much, Kyle, and the LA team.
Yeah, thank you. Thank you very much all as well. I mean, you're part of this community. You make this community happen as well. So appreciate it. And Matthew, I want to come back to you. Kretsu Forum sees hundreds, if not, thousands of companies. I apologize. Hundreds is maybe one small chapter, thousands of companies per year. You and the organization have written books on diligence, a huge, great manual around doing diligence for companies. As you and the organization look at all these companies over the past year, what maybe is getting you excited for the year ahead? And a second question as well, what is some advice for those early stage companies if they are looking to start fundraising this year?
Yes, so the second question is the easier question to answer straight away. Here at Latoken, we did record a webinar maybe a year ago called Raising Early Stage Capital. And we went through all of the best practices for entrepreneurs who want to put their best foot forward. and do a good job. And if you can't find it at Latoken, you can find it at fifthera.com webinars. It's definitely there. It's also on YouTube. So that's the second question. Now, going back to the first question, you know, I agree with everyone else on this panel. I mean, I think across the board, there's no area of technology that isn't flourishing in one way or another. And at Keiretsu is agnostic across technologies. So about a third of those 300 deals last year were life sciences. About 40% were in tech, everything that you would normally think of as being enterprise technology, including things like artificial intelligence, big data, sensors, and so on. And a growing percentage was in sustainable energy and fintech. And then for Wendy, you know, we back a lot of female entrepreneurs. We're always interested in seeing more, but a lot of our members are female, a lot of our chapter presidents are female. So I feel like, you know, the world technology rules, and you can look at the public equity lists. More than half of the world's most valuable companies are tech companies. It used not to be like that. Early stage technology is the highest performing asset category in the world. Blockchain and fintech, where I spend most of my time, has taken off in a way that most people would not have expected. We expected it. Everyone on this panel expected it, but most of the world didn't, and we're feeling good about that. And I think the next 5 to 10 years, fintech is going to get outrageously high returns because the whole world has to transition to digital monies and digital assets, and they know it. They may resist it, but they know it. Just like they knew the internet was coming, they resisted it, and now, you know, the world's most valuable companies are internet companies. So, Kyle, there's a lot to be excited about. Obviously, we're all very worried about the pandemic, and I hope everyone's staying safe. And back to you, Kyle.
Thank you, Mark. Thank you, Matthew. Mark, to you, I mean, looking at the blockchain and crypto space and digital currencies, fintech as a whole, but even more so the Pacific Northwest, where you and your organizations are focused or based, pardon me. Any other additional advice that you would give to companies looking to raise their early stage round or their first round as a company going into 2021 this year? And then also where you can be found online as we come to top of the hour.
Absolutely happy to do that. As we said, lots has changed, but some things always stay the same. It's making sure that you have, as an investor, what do we look at? We want to make sure we're looking at the right team. So you have not only one motivated founder, but you have they have already ideally built a team of them, of people they trust. They have figured out how to work together and really trying to align around the vision of what they're trying to achieve. That vision ideally is customer focused. So what's the impact they are going to drive with their customers? And then last but not least, of course, what's the business model look like, and how as an investor can I make money in that process, right? I mean, if they are asking me for advice, happy to provide it. If they ask me for money, I want to make sure, when do I get it back? How do I get it back? And how likely and how much do I get back? So those are key questions that need to be answered. And if a company comes out and pitches, I think those are answers they need to have on the front of their pitch deck, being very, very clear. Tailored to the audience, in this case, an investor, that we get those answers ideally in the first 30 seconds and not 30 minutes.
Absolutely.
To make it efficient.
And thank you. Where can everyone find you online as well to continue the conversation?
Absolutely. My LA token sign just for you. Twitter at Mark M. Eberstein. The most effective way to follow me so you know what's going on. But also, direct messages are open. If you care, send me a message and we'll go from there. Okay? Thank you.
Thank you. Thank you, Mark. Wendy, piece of advice for entrepreneurs looking to raise this year, whether they're talking to you or any investor for that matter, and then where can they find you to continue the conversation?
Certainly. I think, this year, more than anything, people should think of impact. What impact are you going to have in this world? Have a purpose. Because I think right now when people are investing, especially like, I've always been an impact investor, but now like everybody's interested. We've got Goldman Sachs, we've got BlackRock, everybody that is now just focused on whether it's climate change or whatever that might be. So I think if we create, a way that everybody realizes impact, and also to bring awareness towards, the importance of really supporting women founders. I know I keep like doing this because I'm the only woman on this panel. But anyway, I think that's like the important thing, that showing like that there's so much that, think big, that women need to think big, think about really scaling, because I think what we're seeing is they don't have that confidence, right? And we need to build up that confidence and show these great women in the world. I mean, I know, I'm, like Angie, a dear friend of mine, she, started popping popcorn in her garage with her husband to, support their children to go to college. And they just sold their company a couple, like early, like a year and a half ago, to Conagra for $300 million. And that's Angie's Boom Chicka Pop. And then, just knowing these stories of some people that have started this, that everyone can be an entrepreneur. You just have to have that drive, that resilience, and really have a purpose to go. So that is my 2 cents. Thank you. And you can find me at wendydiamond.com. And that has like all my links to everything. And especially my foundation, Women's Entrepreneurship Day organization, which we're in 144 countries. And we have ambassadors that you can connect to that are really prominent women in their communities, ready to support women founders. Thank you.
Thank you, Alessandro. A quick piece of advice, and where can everyone find you and your fund to continue the conversation?
Well, piece of advice is, keep investing and keep looking for good companies and good entrepreneurs. And I think it's a great time to invest in technology, because technology is changing everything. This is not new. It's something in progress, but they will continue to affect every industry. And so I think there will be a lot of opportunities in the future. And it's a good, if you invest, if you have the opportunity to invest in private companies that are young companies, I think it's worth doing, because I think some of these companies will create a lot of value, and it's good to be the portfolio of these companies, and don't invest in 1 or 2, invest in 20, obviously. But even if you put small money to work, it's a good way to expose yourself to all the new things that are coming out. In terms of reaching me, LinkedIn or probably is the best way to explain it, or you can send me an email at ap@alphaprime.com.
Wonderful. Thank you.
Thank you.
Thank you, Alessandro. Brett, to you, quick piece of advice for companies in the fintech space, and then also where can you be found online to continue the conversation?
Yeah. Some general advice. I think the quality of entrepreneurs continues to grow with the quality of products out there that you're competing against. So you really need to have great domain expertise, amazing product, and great traction that you can get with very minimal resources before you go to investors, right? So if you do those 3 things, you severely increase your chances of getting that early investment. You can find me at brnoyce at unventures.co, Twitter, Brett Noyce, and LinkedIn, Brett Noyce as well. And as always, thanks, Kyle and Latoken.
Thank you, Brett. Jose, to you, same question, one piece of advice, and where can you be found online?
Yes, my piece of advice today, directly to the entrepreneurs, would be that if you want to fit into that 0.1% that we are talking about, you really need to make sure that you are the best of the best. And if you're not going to make it. That's basically what it is. But the good thing is that in 2021, we are coming out with something which is for the 99.9%. So in essence, what we're trying to do is get you into that pool of the best of the best. And I would like to also make a challenge to all these professional entrepreneurs to start looking at this business inclusion issue the same way they start looking at blockchain and also at Bitcoin and many other things, because this is something which is going to happen. And now is the right time to start looking at it. So you can find me on LinkedIn, essentially, under BizMoney, or just on the Jose Graca with a C. And I'm always open to answer any questions that you might have or connections. Thank you, Kyle.
Wonderful. Thank you, Jose. Gary, closing thoughts, and then again, that piece of advice, but also where you can be found online.
Yeah, closing thoughts. So this is a great time, and it's unparalleled with the digital transformation. So the startups that get out there, the investors that get out there and use the medium wisely can be successful. Just you have to think differently. One time I went out to a lunch meeting with the right-hand man of Rupert Murdoch, and he said something to me. I was with the brother of Larry Page, Carl, and he said something to me. It was very interesting. He said, I studied 3,000 entrepreneurs. And he said, what's one thing that you found in common? He said, amnesia. They never talk about the past. So let's forget about the past. Let's talk about today and the future. You can reach me, Gary Fowler, on LinkedIn. You can reach me on Twitter. I'd love to hear from you, and stay positive, stay focused, and go get them.
Wonderful. Thank you very much, Gary. And Matthew, real quick, where can everyone find you in the Kretsu Forum? I believe we forgot to ask you that, so apologies. But where can everyone find you online?
No, so the advice to the entrepreneurs, you've got to be good at presenting your story. Look at that video on Latoken that I mentioned before. If you want to visit Kretsu, we have 55 chapters, thousands and thousands of angels around the world. So just go to kretsuforum.com, look up the global chapters, pick the one or two that are closest to you geographically. There's a reason why you should still start geographically. And then just ping them and say, I'd like to audit, I'd like to observe a Kretsu meeting as a visiting CEO of a company, and they'll let you do that. You can't solicit, but you can hear a number of great CEO pitches, and hopefully that will make you a better pitcher yourself, and then you'll figure out whether Kretsu is a good fit for you. Okay?
Wonderful.
Carl?
Thank you, Matthew. Jose, Matthew, Wendy, Brett, Alessandro, Mark, Gary, thank you all for sharing your thoughts and insights. I know it was a quick episode today, and there's a lot more to speak about, and we'll continue this topic around VCTV, not just this week or month, but again throughout 2021 as more opportunities rise for the early stage investors and companies out there as well. So stay tuned. And also to the audience, thank you so much for tuning in. If you like what you heard, click subscribe, share, thumbs up, check out the archive to hear from all of our investors today on today's topic, but also a number of topics, industries, and regions around the world, along with the entire VCTV family of investors that we have that come and join us here on the show. But also make sure you check out each and every one of them, their funds, their angel groups, and themselves as individuals online to follow up as each of them are interested in looking at opportunities as they all express. So do reach out, make sure you add context when you do. And if you'd like to be on a show like today as an investor or as an entrepreneur to pitch your company, product, or service, reach out to the team and or myself, and make sure to check out Matthew's example pitch, and not just his keynote, but also the pitch that he did for one of his companies in the archive as well as a great example. But reach out to the team and or myself here at Latoken, and we'll find you the right spot. And speaking of that team, a big thank you to the Latoken team and to Maria for making VCTV possible every single day and bringing us all together to speak about topics like this. With that, I'm your host, Kyle Ellicott. You can find me everywhere online at Kyle Ellicott, along with all of our investors. And again, remember to reach out and add context when you do. We look forward to hearing from you soon. We'll be back here with more VCTV tomorrow. Thank you, everybody.